Hello, everyone, and thank you for joining us today for today's webinar, Canadian Automotive Market Update, What's Going On Out There. My name is Emma, and I work on the marketing team here at AutoTrader. We have a few housekeeping notes to address before we begin. To ensure you can hear the audio stream, please turn on your computer speakers or have headphones plugged in. As we go through the webinar, please leave any questions you may have in the question box to the right-hand side of your screen. We will address questions at the conclusion of today's webinar. Now I'd like to introduce you to your speaker, Barish, the Vice President of Insights and Intelligence at AutoTrader. You may recognize Barish from his regular appearances in Canadian news outlets such as Global News, CTV, and the Globe and Mail, where he shares some of the data and research you'll hear about today. Barish has over 10 years of experience in Canadian automotive, analyzing insights and trends shaping the automotive sector to help you make more informed decisions. Barish, thank you for joining us today.
All right, thanks for the introduction, Emma. Hi, everybody. Okay, so here's the agenda. We have quite a few things to cover today. So I have a quick slide to talk about the macro environment, interest rates, gas prices, car prices, what's going on. Very short, one slide, and then I'll jump right into new and used vehicle sales, what happened in the past, what we expect to happen in the next couple of years. After that, I'll touch upon the inventory overview, what we see on AutoTrader.ca, what the expectations are in the near term. And then after that, as you may know, we do a lot of research, a lot of analysis to understand market and how consumers buy and sell cars. And this is one of our key surveys that we run every other year, our path to purchase consumer research. I have a quick couple of slides to talk about that. And before we wrap it up, I'll jump over and then I'll talk about the prices, used car prices, new car prices, monthly payments and loan terms and all that fun stuff. So yeah, let's kick it off. We have quite a few slides to go through. So starting off with the macro environment. It's a busy slide, so please focus on the right side of the slide, the traffic lights. So as you see, right, there's some green lights, there's some amber lights, and there's some red lights. I think that summarizes the economic environment pretty well. There's certain things that are doing really well. For example, the earnings growth is still pretty strong. Household savings rate is pretty strong. It was pre-COVID, it was around 2.8%, and it jacked up to over 28% right in the beginning of the pandemic and came down a little bit. But in the last couple of quarters, what we are seeing is that there's a little bit of an uptick, which is good news for car shoppers as well as those who have to renew their mortgages in the next couple of years. So things are looking good. Inflation is at the target level. It jumped up a little bit in the last month in October, but things are looking good. But on the other hand, thinking about the red lights, interest rates are still restrictive, sitting at 3.75, and the expectation is that there's going to be another cut in December and couple more until the middle of 2025, and that's going to be the natural rate, and things are going to probably pause there, assuming that there are no major changes in the geopolitical landscape. Car prices, again, we've talked about it. They've come down by a bit, especially on the used side. But on the other hand, when we compare the data to 2019 levels, they're still on the higher side. So yeah, economy is chugging along. There's no expectation of recession. Looking at big banks' reports, their forecasts, no one's expecting a recession. So things are going okay. But let's jump right into new car sales and forecasts. So this data is from our friends at Dealertrack that looks at the monthly sales. And as you probably all know, this year has been pretty strong on a year-over-year basis. On a year-to-date basis, we are at 8.2%. October was pretty good at 8.8%. And you'll see in my slide, in the next slide, is that our forecast is that we will be able to hit over 1.8 million cars sold for 2024, and we expect to see an uptick in the next couple of years as well. So a new car, it's fine. And again, in terms of what we believe is happening is that, so I'm gonna simplify this, right? So this graph obviously goes back to the beginning of 2017. So if you look at the graph 17 to 19, again, I'm just gonna rounding up some numbers here, but around give or take 2 million cars were sold between 2020 and 2023, 155, 16-ish. And if you do a simple back of the envelope calculation, around 1.5 million fewer cars were sold. So now that the cars are coming back into the market, they're getting sold despite the higher prices. So we believe that this is the main driver behind the growth in the last, especially in 2023, and we expect to see that in 2024, sorry, we expect to see that the momentum is going to continue in the next couple of years as well. And by 2025, mid-2026, we should be able to hit pre-COVID levels. So things are looking good for new cars. Used car story has improved a little bit, but the trends are a little different. So this data set is from Dealertrack. So these are our sales estimates, used car sales estimates on a weekly basis. So there are two different stories, if that's the right way of talking about it. But if you look at the first half of the year, the first half was a bit on the softer side when it comes to used vehicle sales. Again, the economy is a bit iffy. If that's the right word, and you know, higher car prices, higher interest rates, the demand was softer in the first half. But what we've been seeing, and we've been expecting to see this, we've been seeing that the activity has picked up since in around August of this year. So on a year-to-date basis, we are looking at minus 1.2%. Again, two different stories. H1 was below last year's levels, and H2 so far we are doing much better. Again, why is that? Number one is interest rates have come down by a bit, and there's probably more to go, which is good news for consumers. And also used car prices have started to come down quite a bit in the last while as well. We are down by 8.5% on a year-over-year basis. So we believe that these are the high-level reasons as to why we are seeing. And when we look at the data by prime versus subprime used transactions, so prime has been doing okay since the beginning of the year, thereabouts on last year's levels. But subprime was the main driver behind the decline. Again, higher interest rates, especially for these consumers. And first half was pretty rough, especially until July, August timeframe. We were looking at like double-digit year-over-year declines. But again, with interest rates coming down, car prices are coming down, things improved slightly. They're still down on a year-to-date basis, but there's improvement. So what's our forecast for used car sales? As I've just said, we are currently on a year-to-date basis, we're looking at minus 1.2%. We expect it to be around 1.5% for the year. But again, assuming that the decline in interest rates and car prices will keep going, we expect to see an uptick in demand both in 2025 and 2026. So we believe that the worst is over and things are going to be rosier in the next couple of years. Again, needless to say, this assumes that there's quite a bit of going on in the world, right? The tension between Russia and Ukraine, in the Middle East. There's a lot of stuff going on. So our assumption is that there's no further major geopolitical tension in the next couple of years. But again, these are the things that we can control, and we are monitoring it. But based on what I've just discussed in the last couple of slides, putting new and used vehicle sales forecasts together, overall, we expect to see that the markets keep growing. Again, things are looking up from interest rates and vehicle prices perspective. There's more people in Canada. I think we just recently hit 42 million in population. So overall, the market is poised to grow in the next couple of years. What's going on with inventory? Inventory was obviously a very hot topic in the last couple of years, and I just wanted to give you a quick update as to what we see. So starting with new car inventory at the aggregate level has recovered by quite a bit, even compared to 2019 levels. We are up on new inventory, up by 1.5%. On a year-over-year basis, we are up by 25%. So this uptick has been going on since August of 2022, gradual increase in inventory, which is obviously good news. But on the other hand, if you look at the data by manufacturer of origin, the story is a little different. So if you concentrate on the graph on the bottom, the table in the bottom, you will see that the Asian brands are still pretty low in inventory compared to 2019 levels. So on average, there were 114 cars back in 19, and now we're sitting at 72 cars, down by 37%. European brands are doing well. There are multiple reasons behind it. Number one, as you may know, China's economy has been struggling in the last while, and there's quite a bit of decline in demand, including luxury cars, and also probably more importantly, their automotive sector has been doing pretty well. So they have all these EV brands. They sell a lot of EVs, and the quote-unquote need to buy a European luxury vehicle seems to have declined in Asia. So therefore, all these vehicles, oversupplied vehicles, if that's the right term, they're being allocated to the rest of the world. Hence, we are seeing a bit of an uptick in European inventory per dealer. Domestic brands are also down compared to 2019, but again, if you look at the total number of vehicles available, they're still pretty good. So not too much worry around that, but the Asian brands is the one that needs attention. So the demand is higher on these brands because what we are seeing is that the demand is shifting from luxury to mainstream brands. That's number one, and also the inventory is not catching up as fast as the other two manufacturing types. Used inventory is little different. Again, it's not bad on a year-over-year basis. We are down by around 7% compared to 2019, just over 18%. So the inventory had been doing pretty well up until the middle of the year, and what we've started to see is that there's a little bit of a decline. So if you think about what was going on 4 years ago, right? Unfortunately, COVID hit the world. And as I discussed a few slides ago, because of that, 1.5 million fewer cars were sold. So these cars will never exist. They weren't sold, obviously, and they will never come back to the used market. So because of the impact of off-lease cars not coming back, these, percentage of these cars would be leased, and they would come back, and percentage of them would be traded in and going to the used market, and that's not going to happen. So we believe that the main driver behind the decline in inventory is because of what happened in COVID just over 4 years ago. Couple other reasons, obviously, because of higher interest rates, floor plan costs are much higher, and there's a little bit of hesitation. You heard from the ground that dealers are a bit more hesitant when it comes to acquiring used cars, and whenever there's a car to be traded in, they tend to be on the older and they have more mileage. Again, not as desirable. And we've heard from a few dealerships is that, especially on the domestic side, is because there's quite a bit of new inventory coming on the lots, and they were running out of room to be able to put more used cars on the lots. And looking at day supply, both for new and used, so things are, again, at the aggregate level, they're looking all right, both for new and used. new is around 55. It fluctuates a little bit, but the quote unquote healthy rate is believed to be 60. So we are kind of thereabouts. Again, at the aggregate level, not too concerned, but I'll show you the day supply for new vehicles at the OEM level in the next slide. There might be some surprises there. Used day supply have come down a bit at 42. Again, compared to 2019, it's not too bad, but you know, the main reasons is, as we've discussed, right? So the inventory has been declining, and also there's a demand, a little bit of an uptick in demand, as I've discussed. So we believe that these are the two high-level drivers behind the decline in used day supply. So let's go to the next slide, and I'm just going to pause here a little bit, let you absorb the slide. But this shows new vehicle day supply by brand, and then again, the national 55 is kind of in between. But if you look at the right side of the graph, there's quite a few luxury brands in there. But on the other hand, if you look at the left side of the slide, you'll see that there are a lot of mainstream brands. Again, inventory is a bit more squeezed when it comes to Asian brands, as we've discussed, and there's quite a bit of demand. So, and also the demand, as I mentioned, the demand is shifting from luxury to mainstream. So this is the current view. Again, I'm gonna pause for 10 seconds for you to take a look and look at your own brands, and then move to the next slide. All right. Another hot topic, EVs. What's going on? I get a lot of questions around EVs, and let me give you a high-level overview of what we see. So, as you may know, we do this EV research on an annual basis, and we every year in around March and April. And one of the key questions that we ask consumers is whether they would consider buying an EV for their next purchase. And in 2022, it was 68%. 2023 came down to 56%, and in 2024 now we are sitting at 46%. So the demand, I mean, 46%. When you think about that number, it's still high, but the trend is coming down, right? The demand has been slowing down. On the other hand, the supply side of things, inventory is just like, especially for new, has been skyrocketing. Why is that? Because we have all these mandates to hit, and what do OEMs do? They keep manufacturing more EVs. So the graph that you're looking at is BEV only. So we are seeing an uptick of 97, almost 100% on a year-over-year basis for the last couple of weeks. So lots of supply. The demand is coming down, and guess what's happening to prices? Prices for both new and used EVs have been coming down, and new EVs are down by 9.2%, and used EV prices are down by almost 50%. So one of the things that whenever I talk about the demand, the EV demand, one of the things, like you say that demand has been down, but when we look at sales data, the sales is going up in double digits. And if you read the media, the mainstream media, this is the general theme. That said, so what we did was we looked at what might be the reason behind this, behind these numbers. So the graph on the bottom is from StatScan. So what we did was, as you may know, in Quebec, they're phasing out their incentive program. So right now it's $7,000 provincially, and then it's going to come down to $4,000, and then further $2,000 reduction in 2026, and by 2027 there will not be an provincial incentive. So, and if you look at the sales figures, sales are up by 74% on a year-over-year basis. This is Q2 data by StatScan. If you look at the inventory, the inventory is up by 180%, right? Again, in Quebec only. Why is that? Because of this change, I think it was done around middle of the year. So because the demand is down in the country, what we are seeing is that a lot of cars are being allocated to Quebec with the intention that an uptick in demand because of the upcoming reductions in incentives, and that's exactly what's happening. So if we remove Quebec from the equation, the overall sales figures, they're up still. They're up, I believe, around 10%, 10.9%, I think, but nothing close to the 40% number that's been floating around. So we thought that this might be interesting to share and for you to understand what's going on and what's behind the sales figures for EVs. All right. So as I mentioned, we do a lot of research, and this particular research is we commissioned Dig Insights. So they reached out to over 1,200 car shoppers who purchased a new or used vehicle in the last 6 months. We recently ran this, and again, we ran it every other year. So a couple of interesting things. Number one, regardless of new or used, car shoppers tend to replace a vehicle when they think their current vehicle is getting old. So that's the highest for used and the second highest for new. For new shoppers, they want to upgrade to something nicer and newer as the top reason. The other interesting thing is when we look at the journey from trigger to purchase, shoppers, most of the shoppers, they tend to finalize their purchase within 3 months. So 77% of used shoppers and 67% of new shoppers, they conclude their shopping within 3 months. And on this slide, the other interesting is that there's a lot of cross shopping happening. So 47% of used car shoppers considering buying a new one, and while 36% of new car shoppers consider buying a used vehicle. So that's a lot, right? Like there's a lot of cross shopping happening. And in fact, when we look at our own analytics, over 90% of the consumers do not uncheck the used and new filter. So obviously when you're looking for whatever Honda Civic, click on search, and the results that you'll get will have both new and used vehicle. And what we see is that consumers do engage with the, even though they're a used shopper, even though the majority of the emails that they send goes out to used dealerships, used cars, they're still looking at new vehicles and sending out leads. So I think it's paramount to think about this when you're advertising your vehicles. Obviously make sure that both new and used vehicles are online in front of customers. So we've talked about the majority of the shopping happens within the 3-month frame, and within that 3-month frame, there's a lot of time spent on researching, comparing options, right? So in fact, only 30%, give or take 30% of the time is spent on making the purchase, but the rest is obviously researching and looking at different cars and comparing cars and whatnot. So this is probably going to be basic, but merchandising your car, taking the right pictures and writing a decent description will go a long way, because consumers do spend a lot of time doing their research. When it comes to information sources used, not a big surprise. Marketplaces are pretty high on the used side at 77% and 42% for new. Dealership websites and manufacturer websites are also being used. Not a big surprise, but obviously online marketplaces are a key source. And lastly, we are all aware of the current economic conditions in the market, but what we are seeing is the customers seem willing to pay a fair price when they receive excellent customer service. So this kind of, like, to be honest, surprised me a little bit. I thought it would be more on the, okay, just I don't care about the customer service, just give me the cheapest vehicle, but that's not really what the research says. So again, provide the customer service that the consumer is looking for. As long as the prices are fair, consumers will buy the vehicles that you're advertising. And speaking of prices, let's jump over to our price index. So these are, before I start off, these are listing prices. They are not transactional prices. We are looking at listing prices from the marketplace. So looking at new vehicles, there's just below $66,000 and 2.4% down on a year-over-year basis. They're pretty sticky. New car listing prices, they were at around 68% in the beginning of the year, came down a little bit, but not as fast. But if you look at the used car listing prices, they have come down by quite a bit. So we are now sitting at $35,000, which is a 8.5% year-over-year decline. And we have over 400,000 vehicles on the site, and we crunch this data on a daily basis to understand these market dynamics. And right before this webinar, I had a quick look at the what's happening with prices in November, and the trends continue. Both new and used car prices are coming down, both on a year-over-year and month-over-month basis. We've talked about this. I'm not going to spend too much time, but looking at the prices by segment, segments being luxury and mainstream, the decline on luxury brands is a bit faster. So especially for 2023, luxury went down by around 10% and mainstream was down by 5%. So they're kind of like merging up in terms of the year-over-year changes. But the main driver, especially for 2023, was the decline in luxury again, because of what I said, the decline in demand for these brands. But pricing is only one part of the equation. We also need to consider wage growth. As I mentioned in the first slide, the wage growth has been pretty strong in Canada. So hypothetically speaking, when we ask the question of how many weeks of income needed to buy a vehicle, new or used, assuming that you'll be using all of your money to buy a vehicle, it's still higher than the pre-pandemic levels, right? So for new vehicles, we're sitting around 52 weeks. It was around 44 back in 2019, same month. And when we look at used vehicle affordability has come down at a faster rate, but still higher compared to pre-COVID levels. One thing that, how we talked about the new car listing prices being on the stickier side, but when we look at the interest rates, the story is actually different. So what I want you to do is concentrate on the obviously the top one. The peak was 7.4% in November of 2023, and now we're on average sitting around 6% interest rate for new cars. But if you look at the subvented rates have come down by quite a bit. Again, the peak was around 6.2%. Now we are sitting at 4.6%. So availability is there. There's more and more cars coming on the lots, and certain brands, as we've talked about, they have more inventory, and they're reducing their interest rates as an incentive for consumers to buy their vehicles. I don't have a slide for used, but used interest rates are also coming down, not at the same rate, but they're also coming down. That aligns with the decline in Bank of Canada interest rate cuts. What's happening with payments? Average new car payment is $947 as of October. We almost hit $1,000 back in January. Again, it's come down a little bit. One thing when we look at this data provincially, BC prices, the average new car payments in BC is pretty high, over $1,000. Again, not only payments are higher, but also loan terms have increased by quite a bit. Again, going back to 2019, we were looking around 70 months, give or take, but now 76 months for new car loan terms. Same story for used payments. Used payments are a little bit more subdued on a comparatively, but they're still on the higher side, $621 in October, and we were sitting around $450, which indicates a 32% increase compared to 2019. And just like as how we talked about for new vehicles, the average loan terms have also increased from around 67, 68 months to almost 71 months. So how the consumers pay for these vehicles. They pay more on a monthly basis, and they pay for longer terms. Lastly, a very high level summary. I'm not going to regurgitate the macro view. We've talked about it, but on the automotive side, so supply is good for new, demand is there. We expect further growth, so we don't have many concerns. The pricing is, it's been sticky, but obviously there's some rules and regulations as to what dealerships and OEMs can provide in terms of price cuts. That's why I wanted to share the interest rate decline in interest rates, and which has been coming down at a faster rate. So things are looking okay. No big worries. But when it comes to used vehicles, the story is a little bit different. So is the only question mark, or the exclamation mark in this case, that we have in our minds. Demand is there. We expect it to be strong in the next couple of years. Prices have come down a little bit and good for consumers. So that's going to help with demand. The interest rates are coming down, but the supply, we are monitoring it closely because, again, going back to what I shared earlier, because of these 1.5 million fewer new cars sold, that started to make an impact on the used market. So how is that going to work out? We'll figure it out. If the demand is still high, and if there's less and less supply, the pricing's probably gonna get a little stickier for used vehicles. But on the other hand, if the demand slows down, then that might have an impact on the pricing. So there are quite a bit of unknowns on the used side, but this is how we look at the market, and then that's what we see. So with that, I'm just gonna thank you and pass it to Emma for if we receive any questions.
For sure. Thank you for sharing all these insights with us today. We have a few questions that have come in from the audience. First being, do you see the Bank of Canada making further adjustments to interest rates this year?
Yes. So now the expectation, so the inflation has picked up a little bit. In September, it was 1.6%, now jumped up to 2%. Again, within target, no big worries. And when I read bank reports, the majority of the banks expect that there will be a 50 basis point cut in December in the next couple of weeks. A couple of banks, they said it'll be at 25 basis points. So we'll see what's going to come out, but the decline will definitely continue in order to be able to stimulate demand.
Okay, and the next question is, what do you think is going to happen to used car prices in the near future?
Yeah, I think that kind of, we kind of touched upon it in the last slide, but first of all, like, I get this question a lot, and we haven't modeled it. We don't have a forecast per se, but one thing that we are pretty sure is that we don't think that the prices will ever go back to 2019 levels. The market's changed. The inflation has been high. There's more EVs coming into the market. The vehicles are larger. More and more consumers are buying pickup trucks and SUVs. So we don't think that the prices are going to go back to pre-COVID levels. But in terms of like what we are going to see, we probably won't see, as I mentioned in the beginning of the year, we almost hit $40,000. So assuming that this used car crunch is not going to be too bad, probably we won't see those numbers anytime soon. So if I have to guess, we'll probably hover between mid 35s in the foreseeable future.
Okay, and how often will you be doing these webinars, and will they be the same structure?
So we are intending to run these every quarter. And yes, probably the structure is going to be pretty similar. So as you've seen, there's I shared some insights from our path to purchase research. So whenever we have new piece of research, we'll include that in the material. But in terms of looking at the overall market, we believe that looking at inventory, prices, demand, and everything that we've talked about, it's a good framework for everybody to understand what's happening. So the skeleton is not going to change, but whenever there's new analysis and new research being conducted, we will share it with the audience.
Yeah, for sure. And then the last question, which I can take, is can we get a recording of the presentation? So yes, you will be receiving a recording of the presentation. So keep an eye out for a follow-up email and we will share the recording from today's webinar. So that was the last question. Thank you to everyone who has taken the time out of your busy schedules to join us for today's webinar. As mentioned, we will be sending a recording of the webinar to you, and we'll be running these webinars on a quarterly basis to keep you updated on the latest data and trends. We hope you will join us in the next installment of Canadian Automotive Market Update. What's going on out there? Thanks, everyone.
Thank you.